Okay, so have you been watching the dramatic, honestly kind of terrifying roller coaster ride of Indian tech stocks over the last couple of years? I mean, it's been a total wild ride. We're talking extreme hype, deep crashes, and, plenty of skepticism from the sidelines. But looking at some recent market movements, we really have to ask the billion-dollar question. Has this heavily battered sector finally started a sustainable upward climb?
Well, looking at the data, it's painting an incredibly optimistic picture right now. Just look at this number. In just the third week of June alone, 15 out of 23 tracked new age tech stocks actually saw gains. And we aren't just talking about a fraction of a percent here either. Some of these companies jump by up to 29% in a single week. That is a massive market rally, and it's definitely turning heads everywhere.
Welcome to today's Explainer, everyone. Today, we're diving deep into the core theme of India's tech stock Phoenix. Basically, this remarkable recovery of new age tech companies. But more importantly, we are going to look ahead to the ultimate market test that's rapidly approaching with the highly anticipated Swiggy IPO.
So here's how we're going to break it all down today. First, we'll look at the tech stock comeback. Second, the pivot from cash burn to profit. Third, navigating the market risks. Fourth, the giant Swiggy IPO. And finally, we'll ask, is the hype justified?
All right, let's jump right into part one, the tech stock comeback.
You see, this stabilization we're seeing, it's being proven by some really impressive individual company performances. Take Office, for example, the co-working space provider. They just reported their very first profit since listing, pulling in 1.4 crore rupees. Then there's MapMyIndia, up a staggering 19.5%, heavily leveraging their early market position in high-growth areas like automotive navigation. And PB Fintech, the parent of Policy Bazaar, well, they gained 18% following a massive turnaround, reporting a 64 crore rupee profit. These aren't just isolated spikes, folks. They're clear indicators that the tech sector is finally finding its footing.
And NetWeb Technologies is a perfect example of this. They are strategically placing themselves right in the path of global tech momentum. With 37% of their revenue in private cloud and 36% in supercomputing, they are tapping deeply into the surge in generative AI and domestic data center investments. I mean, when your business model acts as a proxy for a $13 billion total addressable AI market in India, yeah, that is where explosive growth happens, for sure.
Moving right along to part two, from cash burn to profit.
Honestly, nothing symbolizes this massive shift better than this number right here, 324 crore rupees. That's Zomato's record profit after tax for the financial year 2024. For a company that was literally the poster child for burning through venture capital, achieving this level of profitability is an absolute game changer. It doesn't just validate Zomato's business model, it honestly validates the potential of the entire new age tech sector.
So you're probably wondering, how did they actually pull this off? Well, they didn't just sell more food. If we look at their gross order value, the total amount of money spent by customers on the platform, food delivery is still their anchor at 63%. But look at that 24% chunk right there. That is quick commerce through Blinkit. Quick commerce grew over 100% year over year in 2023. By diversifying into high-margin, hyper-growth segments like this, they've completely transformed into a diversified quick commerce giant.
And listen, this aggressive drive for operational efficiency isn't just a Zomato phenomenon. It is echoing across the entire industry right now. Take Nykaa Fashion, for instance. Despite currently operating at a loss in their core metrics, their CEO, Nihir Parekh, is confidently projecting positive EBITDA by the end of FY26. It's a very clear signal to the market. Growth at all costs? Yeah, that's out. Disciplined, profitable growth is the new mandate.
But hey, we do need a reality check. Let's look at part three, navigating the market risks.
Because, let's be real, the crucial point here is that despite this incredible comeback, investors still face severe, sometimes company-altering risks. We're talking about strict regulatory hurdles, where compliance is absolutely non-negotiable. We're talking about extreme market volatility, which often gets triggered the second early investors decide to cash out. And of course, there's the fierce, relentless competitive pressure that requires a constant stream of fresh capital just to stay relevant in the game. For a pretty stark reminder of what happens when things go wrong, we literally just have to look at the cautionary tale of Paytm. Early in 2024, the Reserve Bank of India slapped severe restrictions on Paytm Payments Bank due to persistent non-compliance issues. And man, the market reaction was brutal. Between January and June, the stock plunged nearly 50%. It's a sobering example that, in the fintech space, failing to address regulatory concerns can completely derail years of hard work and innovation. But risks aren't just regulatory, right?
Take Hinasa Consumer, the parent company of Mama Earth. Despite reporting their highest quarterly profit for the year, they faced rapid market volatility. On June 11th, major pre-IPO investors offloaded over 280 crore rupees in shares. By the very next day, Mama Earth's stock had dropped nearly 5%. It just goes to show how rapidly sentiment can shift based on shareholder movements, even while the business fundamentals, like expanding into 1,000 Reliance retail stores, remain incredibly strong.
Which brings us to the main event. Part 4, the giant Swiggy IPO. Just let the sheer scale of this number sink in for a second. 11,327 crore rupees. That is the size of the upcoming Swiggy IPO, structured as a combination of a 4,500 crore fresh issue and a whopping 6,827 crore offer for sale. An issue of this absolute magnitude isn't just a funding round, folks. It is a vital litmus test for the entire market's appetite for new age tech stocks right now.
Now, what's really fascinating here is how it perfectly pits two industry titans against each other. On one hand, you have Zomato, the market leader who finally turned the corner into profitability with that 324 crore profit. And on the exact opposite side, you have the challenger, Swiggy, entering the public market while still heavily burning cash, reporting a massive net loss of over 2,350 crores in FY24.
If we dig into Swiggy's financials, their trajectory becomes pretty clear. Their total income is growing impressively year over year, jumping from roughly 6,100 crores in FY22 all the way up to over 11,600 crores in FY24. But when you drop down to the profit after tax, the reality of their cash burn really stands out. Now sure, the losses are narrowing, down to 2,350 crores in FY24, but those net losses still remain incredibly steep.
So what's the game plan? Where exactly is all this fresh capital going to go? Well, Swiggy has laid it out clearly. They are placing $1 billion bet on quick commerce. Over 1,178 crores is going straight into expanding their Instamart network of dark stores. Another 1,115 crores is earmarked for heavy brand marketing to fight for market share. And over 700 crores will bolster their tech and cloud infrastructure. Basically, they are gearing up for a fiercely expensive battle for the future of hyper-local delivery. All right, bringing it all together in part 5. Is the hype justified? To figure that out, we really have to step back and remember what we're actually dealing with here. New age tech stocks. Inherently, these are high-growth companies meant to disrupt traditional industries from the ground up. Whether it's through digital mapping, cloud computing, or quick commerce, they offer astronomical rewards when they succeed. But as we've seen today, they are highly volatile and carry immense risk.
Which leaves us with this final, provocative thought to ponder. As investors weigh Zomato's newly profitable reality against Swiggy's high-stakes gamble for market dominance, how is the broader market going to react? Will Swiggy's historic 11,000 crore IPO be the ultimate validation that India's new age tech sector has fully recovered and matured? Or will it serve as a harsh, expensive reminder of the dangers of cash burn? It is a fascinating time to be watching the markets, and I absolutely can't wait to see how it all unfolds. Thank you so much for joining me for this explainer.